A few days ago, one of my clients texted me and asked, can I only sell my property after 5 years? And what's the tax that we have to pay for real estate?
Are you serious?
So to answer this question, nope. You can sell it anytime you want, not necessarily after 5 years. And his second question is about the property tax. Now, the most basic property tax that not everybody knows about is the RPGT, as known as the Real Property Gain Tax.
Have you heard about RPGT?
What's up everybody, welcome to VC. My name is Vincent.
And I'm Chloe.
So whether you are a property investor or just an owner simply wanting to sell your current property to purchase your dream home or dream investment property, it is important to be aware that all of the costs included in the real estate transaction, which include the Real Property Gain Tax, RPGT in Malaysia.
So what is RPGT? RPGT is one of the most important property-related tax, and it is chargeable to the profit gained from selling a property. So to understand it easier, like how the name really sounds, real property, it gains tax. RPGT is a tax on profit. That means it is payable by the seller of a property when he or she sells the property at a higher price compared to the purchase price. Some may get confused that RPGT is the same as income tax, but it is not. Income tax is on income, employment, business investments, where you are charged from the profit that you've gained, while RPGT is the tax of your income from disposal of a real property, which is defined to mean any lands, buildings, or properties.
Well, RPGT is only imposed on the territory concept, which means it is only applied in Malaysia. So for example, if you own a property outside of Malaysia, let's say Singapore, RPGT does not apply in this situation. Yep. So let's understand why the RPGT was implemented. Like why we do need to pay for this, right? Yeah, the act was introduced in 1976 under Real Property Gain Tax 1976 as a way for the government to limit property speculation and prevent a housing bubble.
What is a housing bubble, you may ask? A housing bubble, or some may call it real estate bubble, is the sudden increase of property prices due to demand, speculations, and abundant spendings to the point of collapsing. Housing bubbles usually start with an increase in demand in the face of limited supply, which takes quite an extended period to replenish and increase. At some point, demand decreases or stops flowing at the same time supply increases, resulting in a sharp drop in prices, and that's where the bubble bursts.
Yep, although it was introduced in 1976, it took nearly 2 decades for the RPGT Act to be implemented, since the RPGT Act has gone through several changes in accordance to the direction of the government. Then, even during 2008-2009, the government suspended the act temporarily to get people involved in the real estate, which caused people, especially investors, to start buying then selling them, buying then selling them, just buy and sell, buy and sell.
That sounds like a rap.
Buy and sell, buy and sell, buy and sell, buy and sell. Okay, so buying and selling because they didn't want to pay for RPGT. That's where the supply couldn't meet the demand, right? Then the housing price went up again.
So like if you heard from your uncles, aunties, they all always say that buy properties and flip lah. Yes, this was back in the days when they bought property while it was still under construction, cheaper price, right? And that's when they get the keys, they just sell it off to earn money, which is a lot.
But not to forget, if these owners want to dispose of their property, not everyone will be able to buy it because it's already second-hand or even third-hand property. Not to mention the extra miscellaneous fee that they have to pay, right?
Yep, so after that, the RPGT was introduced again in 2010, and that's when they started implementing based on the holding periods of the property, where different periods of holding will be imposed with different percentages.
So technically, RPGT is classified into 3 tiers. You have the individual who are citizens or permanent residents. Secondly are individuals who are non-citizens or foreigners. Thirdly are companies.
Take a look at the chart right here.
So let's take an example. You're a Malaysian citizen, so you bought a property priced at 500,000 in 2014. Then you sell it off in 2018 at 700,000. So you own the property for 4 years. Referring to the chart, the RPGT rate that you'll be charged is 20%.
Simply just take your selling price, which is 700,000, deducting with the purchase price, which is 500,000. So your chargeable gain would be 200,000. Take the chargeable gain, multiply it with the rate, which is determined by the number of years you own the property. In this case, it is 20%. So your tax would be 40,000.
So usually the lawyer will volunteer and calculate the tax for you. But
Wait a minute!
there's kind of a trick, right?
Not a trick, but it sounds nicer calling it your rights. Yeah, so basically you can file it yourself because you can deduct allowable expenses. Taking back our example just now, the chargeable gain of 200,000 is actually not the net cost because you still have other costs. For example, legal fees, agency fees, renovations, extension costs, etc. So it's time to check back your previous receipts or maybe start collecting them.
Which means maybe if you have extended your kitchen area, then deducting your legal fees, you have done a renovation to the porch, you have deducted 100,000 from 200,000, which leave you with 100,000 chargeable gain. Now this is the amount that you can take to multiply it with your RPGT rate.
So if you're looking into selling your property and you're not sure what to include into deducting your tax, feel free to drop us a message at Instagram at VC.ESTATE or email us at this and we will advise you accordingly.
On the other hand, if you're selling your property at a loss, you don't have to pay any RPGT because you did not make any profit. If you made a profit, you need to make sure that you pay the RPGT within 60 days of the sale. If you don't, then the consequence is an additional 10% penalty on top of everything else. You can pay the RPGT by paying a fee for the solicitors of the sale. Paying yourself is also possible if you prefer that. Instead of dealing with a lawyer, you can fill in the necessary forms for the Inland Revenue Board. So RPGT is a lot though.
Yep, but did you know that you get exemptions on RPGT? Not to mention quite a lot actually, though they did make some changes to RPGT in Budget 2020. Budget 2020 introduced an interesting new change to RPGT by shifting the base year, which RPGT is assessed against from 1st January 2000 to 1st January 2013. Sounds confusing, but what it means was if you bought a property before 1st January of 2013, the value of the property is now valued against the estimated value on 1st January 2013, not the actual date of your purchase price.
Yep, so let's say you bought a property in 2001 pricing at 200,000 and you sell it off in 2015 at 600,000. Good for you. Instead of taking the selling price deducting with the purchase price, your RPGT will not be calculated using your SPA, your sales and purchase agreement's property price, since it is before 2013, which means you have to go back and check the value of the property on 1st of January 2013. If the value of the property was 500,000 on 1st January 2013, this amount will be used to calculate your RPGT.
To conclude this, it means the tax you pay is likely to be lower since the housing price increased between January 2013 and the current date is likely to be lower than it was if it was assessed against the value in 2001. So back talking about RPGT exemptions.
So the first one would be according to the Section 8 RPGT Act in 1976. There is a once in a lifetime RPGT exemption for residential property only, where you must be a Malaysian citizen or permanent resident. This exemption will be 10,000 ringgit or 10% of the chargeable gain, whichever is greater.
Secondly would be an exemption on gains when a property is transferred within family members such as spouse, parents to children, grandparents to grandchildren. But remember, transfer between siblings are not included in the exemption.
Yep. Thirdly would be the exemption of RPGT for disposal of low-cost residential homes of 200,000 and below in the 6 and subsequent years without affecting the once-in-a-lifetime disposal exemption. Great for you, which means you don't have to pay more tax now?
Yep. Last but not least would be the Penjana scheme initiated by the Malaysian government, where there's an RPGT exemption for Malaysian citizens where they can dispose up to 3 residential properties from June 1st, 2020 to December 31st, 2021. This is 100% exemption on the chargeable gain, which means you don't have to pay for RPGT. Keep in mind, again, this is only for residential properties.
Yep, so take advantage of the exemption. Never assume that because of the economy is bad, so no need to sell your property because nobody wants to buy, right? You haven't even tried to put it out in the market, you haven't even tested the water and say it's too cold. Don't miss out the chance, you never try, you never know, right? And also, if you sell it, your gain, you don't have to get charged so much tax.
Yeah. We also mentioned in our previous videos that because of RPGT exemption, 2021 is actually the best time to buy real estate. Not just because sellers get to enjoy RPGT exemptions on disposal of residential properties, but this also boosts up the stocks in the market and buyers would have more choices. Not to mention, both of the parties have room for negotiation since the buyer does not have to pay for RPGT. So if you're wondering why 2021 is the best time to purchase a property, you can click the link right up here to check it out.
Oops. So regardless, it is up to you to make the choice. We hope this video helped you to understand more about RPGT instead of being confused when you get a bill of payment. So that's all from us today and thank you for watching. If you gain some new knowledge from this video, do give us a like and subscribe as we post a lot of property, real estate related content here in this channel. Join the VC family and we will see you
In the next video. Ciao!